morning, traders. Welcome to the weekly Elliott Wave Street update. I'm Juan Maldonado, and it's a pleasure to start the week with some of our wave counts. This is the euro. On the euro, I have been selling from the highs. My first entry was here at the end of wave X. Actually, this was a signal, but I was sleeping at that moment. It was at 1 a.m. And next day, I triggered at the 122.34 area first entry. I take partial profits, 30 pips, half of my trade during the leg down, and I keep half of my trade open. Then here, I added a sell trade to my position, and here I take profits of my first half. I'm gonna keep the other half of my trade here open for a while. Let me show you the entries on the Elliott Wave Street membership. We have a Telegram channel for members where I share my trades. So here was my first entry on the euro, made the 26th, and here was the second entry, June the 1st. So now let's talk about the future and what's the plan in terms of the waves. My plan is to have one leg more down here and a bounce for a 3-wave sequence. And here is going to be a third entry. Here is going to be another opportunity to get into the sell trade after the ABC. The target that I have on the euro on the daily chart is the previous low, 117. We have a big distance, and there is something else really important. Look, we are starting to see the change of trend, the change of behavior. We have a 5-wave sequence, lower lows, lower lows, lower lows. Clearly, the trend is switching from bullish to bearish. Once the market completes the 5-wave sequence here, we need one more down. During the 3-wave sequence up is going to be the sell trade. I don't know how deep the wave B is going to be. We can have an idea by using the volume profile on the euro, where I'm looking for the I'm looking for a target around the 121.90. With this profile, I know that there are a heavy volume around the 121.90. So once the market finish, I'm expecting here to recap the wave count of 1, 2, 3, 4, 5. Once the price finish this leg, I'm gonna look for a 3-wave sequence up to the point of control, and that's gonna be roughly the area where we can look for trades. Let's have a look at the dollar yen. On the dollar yen, I'm bullish on this dollar yen. I went long on the dollar yen. Right here at this candle, this green candle, once the price started to reverse, that's the 109.35, and I leave the stop loss below the low. So here, let me show you this trade. That was June the 7th. This one here at the 109.35 with a 30-point stop loss, 109.10, and well, a little bit more than 30 pips, and take profit 110.30. So I already booked half of my trade, and I'm looking for the other half here of 110.30. And of course, if price hits and crosses, I'm gonna hold a little bit longer the position, or I can take half of the half out here and just keep the trade for longer. So risk management, trade management is key when we are doing trading in these markets. Let's have a look at the S&P. On the S&P, we have a record high here, and we have new record highs here. So question, is the S&P expensive? Yes. The answer is yes. It's extremely expensive right now. Would you buy at resistance? No. So I have been buying the S&P here. Here you can check the previous videos on the channel. I have been buying the S&P. But now the question is this wave count going to work? We are going to have a huge wave 3 or not? Well, first thing to watch is the liquidity area. Right here, we have plenty of stop losses. Imagine traders who went short here. That's why the price falls, right? Because traders went short, because we have sellers. And some of them, of course, manage the trade, book some profits. But some others that are thinking that the S&P is going to go lower are holding the trades. And where is the stop loss? Well, somewhere here above the high. So if the S&P is going down, I believe the institutions are likely to pressure the S&P higher here in order to capture all the stop losses. And if we have the price reversing after a good exploration, not just these tiny bars, a good exploration, some candles at these levels, and then it reverses, closing below the previous high again, that could be a confirmation that we are going back to this low. And here we can go outside and then go above the previous high again, right? So sell trade will be only if this happens. Now, if the bullish scenario is right, that is my highest probability, I have been long from here, then we need to see the price crossing the liquidity area without reversing, without rejecting. So let's see. We are at resistance right now on the S&P. And finally, I want to check the bond. The bond was going up last week strongly. And look, it seems that that's it. It seems that it's ready to go back low to the lows. But the thing of the bond is that, of course, if it's going down, is good, because traders are selling their positions, big institutions are selling their bonds to put more money into the stock market. But also, when the bond goes down, the interest rate goes higher. And when the interest rate goes higher, it's good for the banks, but could be bad for the stocks. So we have that thing there. However, to me, the most important thing is to have a steady bond, sideways. So if it comes back to this area, great, because it's gonna be sideways. It's gonna be steady. Big movements on the bonds are bad for the market, but I believe that this risk-off scenario where price is going down and on the bond, all this money is likely to return back to the stock market. All right, traders, a lot to think about this week. If you want to receive the Elliott Wave Street analysis, please visit ElliottWaveStreet.com right now on your browser. And then on the membership tab, you can subscribe to any of our plans. We have the Forex, the stocks, or the full access. You can read here the instruments and everything on each plan. And all the plans include the Members Academy. That is a special area with education in general trading, in Elliott Wave, and a lot of stuff that I add every week. So traders, sign up now. Please have a fantastic trading week. I'll see you soon inside the membership. Take care. Bye-bye.